to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja. I'm MC Laubscher, and this is Cashflow Ninja. Thank you so much for spending your most valuable resource, your time, once again for another episode. In today's episode, I'm joined by Van Carlson with Strategic Risk Alternatives. He's a returning guest. The previous episode that we did with Van is at cashflowninja.com, along with all of our other resources. We just redid the website too, so definitely go check it out there. Van, welcome to the show.
Thank you. Looking forward to our conversation.
Absolutely. Now, for folks that's not familiar with you, and this is the first time that they're listening to our conversation or to a conversation that we're having, can you please share a little bit about your background and journey with them?
Yeah, you bet. Been in risk management for almost 30 years now, dealing with business owners all over the country, starting now in the world. But the biggest thing is I'm a risk mitigator. I manage risk for clients that are really self-insuring risk, and we're pretty busy right now, based on where we're at today, what's going on in our economy. But self-insuring risk became real for a lot of business owners, and we're pretty much educating clients. But we've been doing this since 2008. Prior to that, I ran a successful property and casualty agency, and have done some other things since. But the biggest one is Strategic Risk Alternatives. We bring unique strategies to risk management, and have been very successful at it, and we continue to be successful at it, and having good conversations with clients right now, even during these times.
Yeah. Yeah, I can only imagine. So let's talk about that a little bit too, because one of the biggest lessons that or big takeaways for me was seeing how unprepared individuals, because we deal with a lot of business owners and also investors, but how unprepared individuals were in the event of the inevitable. As I always like to say, something going wrong, guess what? At some stage, something's going to go wrong, right? Something's going to happen. Maybe a couple of comments of you're working with a ton of businesses out there, a ton of business owners, but maybe you can comment on how unprepared businesses were for the inevitable.
Well, and it gets back to way we do things, right? I mean, clients typically, most of our clients are entrepreneurs, forward thinking, and so forth. And there's some negative that comes with that on the other side. There's good and bad on both sides there. Anyway. The bad thing is they always, they're always looking for the rainbow. Things are always going to get better. They don't prepare for the downsides of markets. That's not fun. That's not exciting. That doesn't allow me to go expand my businesses and buy the new boat and the cars and all that. That's just not fun. So, it's estimated most businesses out there, the ones that are mostly affected by this, the close down, they had 30 to 60 days of cash flow sitting in there. And, personally, you should have 6 months, right? Minimum, right? But, businesses run on 30, 60-day cash flows. That is kind of shocking, to your point. I mean, and so, we talk about business interruption in businesses. And then, of course, the biggest thing I always talk to clients about is intangible assets. The greatest intangible asset of any business is the cash flow. And when that gets hit, what are you supposed to do? I mean, where is your rainy day fund? Where is your fallback cash? I mean, the banks aren't going to help you. We know that. I mean, and they have their responsibility too, of course. And so we always talk about with business owners, our program is the ability to take tax deferred dollars, put it into a reserve, and build it up. And if you have to fight the fight, I'd rather use pre-tax dollars versus after-tax dollars. This is really why the code exists, and we can talk about all that stuff and talk about it with our previous video, but our previous podcast, excuse me. And but how do you do that today? You have to be a saver first off to do our program. If you're not a saver, then you're probably not going to be a client of ours. And we have a lot of clients that are kind of over it, where, hey, I'm tired of all the risks I've taken to do what I do. How do I mitigate that risk, and how do I become a winner on the backside of this thing? And so we bring some strategies in place, and we're very busy, and it's because business interruption. there's direct losses and indirect losses when it comes to traditional insurances, and they do a great job with direct losses. And what I mean by that is the building catches on fire. I can't produce my parts or manufacture in that factory anymore. I'm disrupted. Now they trigger disruption on the policy, right? So that's great. The problem is when the factory gets shut down because I got an employee sick and now they got to sanitize it for 2 weeks, or worse, the government shuts me down forcibly. The bills don't stop. The rent's still, so that starts eating cash flow. And the problem is you have so much cash flow eroding, you can't even afford to open up your doors.
Yep.
That's the whole concept of business interruption, is to maintain the cash flow of the business. And we do that better than anybody else when it comes to, educating the client on why you need a program is to protect the cash flow of the business.
Yeah, absolutely. And one of the things, so you mentioned a couple of self-insured strategies, and this is higher level strategies for specific business owners. Cashflow Ninja listeners that heard you on the show before know we spoke a little bit about captive insurance strategies, which is higher level strategies. So, and the reason why this becomes so important, and maybe we can talk to the environment right now, of looking at different and higher level strategies is to your point, we're in a situation where, let's just say you have an event business, that became a huge industry just over the last couple of years, where there's so many conferences. I mean, I lost count of all of them, but you've got all these massive conferences and trade shows and so forth. There's concerts, like all these musicians and rock stars. Now all of a sudden that's all canceled. Conferences are canceled. This isn't something that you can just go and take get a transfer risk over to a third party basically and say, well, what should happen if something gets canceled or the government basically shuts everything down and we can't assemble, more than 10 people at a time or whatever the laws are. But there are other certain strategies that you can take in place to control the uncontrollable and in-house and have specific things in place in the event even of something like this, right?
Oh, absolutely. And, the domino effects of this is I just keep hearing more and more stories as we talked. I talked to a pretty successful property and casualty agency yesterday, and they're estimating 25 to 30% of their small commercial premiums are going to be gone, which translates to personal lines on their home and autos. Another 15 to 20% of the premium are going to be gone because people they'll be out of jobs. And so,
yep.
When you talk, that's a property and casualty agency, which you would think is pretty stable cash flow, right? Our
Yep.
financial advisors, look at the market, look at, clients is folding it in, calling it quits. I can go on and on about the domino effects. You bring up some ones that are great examples. So traditional insurance companies do a great job again on the indirect and direct.
Yep.
When SARS came out over a decade ago, some companies lost in lawsuits because they thought they had excluded the right wording to avoid pandemic issues when it comes to business interruption. They want to cover direct losses. Well, when you get all of a sudden a pandemic and you have to shut down for whatever reason, that's an indirect loss, right? Well, they lost in court. I'm talking about Chubb, big insurance carriers. Well, when that happened, they came out and specifically put exclusions out of the policies for pandemics and quarantining, and if government deems it to be shut down, all that stuff was excluded under business interruption going forward. And I know there's a big push right now and people are upset. I get it. You pay premiums, some people think they buy a policy and it says all risk and they're covered for everything, right? And nobody reads the policies, and I don't blame them. I if you want to can't sleep, read an insurance policy. You'll sleep like a baby. But all of that aside, the insurance industry, in the commercial insurance industry in the country, collects $71 billion a year in premiums. That's commercial auto. That's the semis going down the road to the high-rise buildings being insured. $71 billion a year on average they collect in premiums. It's estimated right now over $400 billion of business interruptions occurring in small businesses per month. So even if they were to be mandated by the insurance, by the states or by the federal government to cover this thing, they would go. You would see institutions. I'm talking like financially strong institutions like State Farm, Allstate, Zurich, Hartford, they would be coming in insolvent if they were forced to do it. You get back to 9/11 when the towers fell in New York, people started calling it act of war. Well, they specifically had exclusions on policies under act of war. They started calling it terrorist act. Well, that wasn't necessarily in so now the insurance industry was basically stepped up and said, we'll cover these claims. And then, of course, Congress certainly after that did a backstop called now everybody has terrorism coverage on their policies. They can exclude out of there if they want, blah, 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 on some policies. But for the most part, we have terrorism coverage now, but it's being backstopped by the federal government. You charge 1% of the annual premium now goes towards terrorism coverage. This is not the same thing, obviously, far and in between. I can't stand it when they even try to compare the two. But anyway, this is much, much bigger. I mean, this is more detrimental. This is far, people call it per heart rate. Like, no. This is what we've done to the economy, what we're doing to the economy by choice is so detrimental to small to middle market business owners that no insurance company, first off, you're not charging premium for the risk.
Yep.
But now you're going to be mandated to support the risk? That doesn't work because you know why? Commercial buildings still are going to catch on fire. Trucks are still going to have accidents on roads. People are still going to slip and fall. You're still going to have product liability. Those things didn't go away.
Right.
And now you're asking commercial insurances to take on it. No, it's not going to happen. But here's the thing. Congress did pass a tax code back in 1986 that allows you to recognize self-insured risk and create an incentive to own some kind of form of your own insurance company. And that's what we do. That's what we take that code and we educate business owners on it. The do's, the don'ts, the good and the bad. There's been abuses, no shocker. It's got great tax advantages to it. We Americans love to, nothing's ever good enough, right? We always got to stretch that envelope as far as we can, and there's been abuses. But I think for the most part, our clients understand that they have risk out there, and how do you mitigate that risk better? And there are tax advantages too. And the biggest tax advantage is I'm able to give you $1. I'm able to put $1 aside for you versus an after-tax dollar. And I'd rather have a full dollar to go fight the fight if I need to versus trying to use after-tax money. Because unfortunately, most people don't have after-tax money. And that gets back to your cash flow. That gets back to your 30, 60 days in a hole. We have no incentive to save money in this country. Our program provides the incentive. And there's rules, regulations, there's a 4-part test and all that good stuff. And we got plenty of videos to educate people on that. But that's what we do. And I think, if we can provide better services to businesses and for the unforeseen, just like you said, for the unforeseen, right?
Yeah, absolutely. This ties into a lot. So one of the first things that I thought about was, when you are in a group of, you go to a mastermind with business owners and entrepreneurs, the initial mindset is to solve all problems with more revenue, right? In sales, let's just sell more stuff and all of our other problems will go away. Massive tax bill, let's just sell more stuff and pay for that and write that big check, right? So there is that mindset. But if you tweak it a little bit and you understand, number one, that there's things that I can do a little bit more higher level, so working with the right professionals, of not just focusing on sales, but looking at the business as a whole, just that as you would look at a household, right? There's things that I could do, number one, to reduce the taxes that I pay legally, and then also form a sort of add a savings element of that to reserves, which then also allows you to prepare for a lot of other unknown variables that are out there that you might not even know of and that you couldn't even really buy coverage for or transfer that risk to someone else. You retain it, but now you have reserves to cover that. It changes the game completely for business owners. And even in an environment like this, which I know we'll talk a little bit about too, is the opportunity that it now provides for folks that own businesses that were prepared to capitalize on this new world that exists, because there's going to be a ton of opportunities, right? There's going to be winners and losers like there are in any market.
No, exactly right. And I would tell you that our clients are better positioned to take advantage of the down. I mean, like you said, there's winners and losers. Well, if you can shade yourself, if you can game the game and push yourself over to the winner side more, Why wouldn't you do that? This is a legitimate tax code that big companies have been taking advantage of for years, called 831B tax code, by the way. Um, we're pricing it in a way that small to middle market business owners can take advantage of it. The very what do they call it? Protection check plan, or whatever that thing,
Yep.
whatever the PP, whatever it is.
PPPP. A lot of
Yeah, yeah.
acronyms.
Uh, you know, are supposed to help. So we want to get to those business owners. We want to get to the restaurateurs. We want to get to the event planners. People that are really dramatically affected by this. That during those good years, just to take a little bit off the top and park it off to the side, is risk mitigation 101.
MC Lobshier, the creator of the Cash Flow Ninja and Cash Flow Coach at Producers Wealth, where we help our clients integrate infinite banking with their business and investments. To learn how you can create your own banking system to turbocharge your investments and business in 30 days or less, go to yourownbankingsystem.com. That's yourownbankingsystem.com.
And I hope to God they never have to. It's like any insurance policy I ever buy, or any insurance transfer risk I do, or anything else. I don't want to use it. I can't think of a good day when an insurance policy is being. It's not going to be a good day. You just be thankful you got it, right?
Yep.
But that aside, I think again, it's the price points. It's making sure that the education of the clients. One of the things we would probably be 4 times. I mean, we have about 250 to 300 companies that work with us. We have over 100 agents around the country that we work with, bringing our products and bringing education to their clients about what we do and how we transfer risk and how you take advantage of the 831B, and you have to have an insurance manager, and you have to have a lot of rules involved to do this program. And we do all that. The risk planners that are out there, they're having a lot better conversations with their clients today than that did our program versus the ones. Unfortunately, one of the worst things a property casualty agent can tell their clients is they're not covered. And unfortunately, I've talked to them every day right now. They're saying that a lot today, and that's never a good position to be in. And again, it's an education. It's been around for 34 years. Unfortunately, a lot of business owners don't know about it, and it really has more to do with the CPAs. Unfortunately, I think a lot of business owners, you and I know this, that I believe they have a false sense of trust with the CPAs.
Yep.
Their CPAs are really, smart. CPA once told me, Van, really the IRS looks at more as just their partner than anything. And I can't be as good as partner with my own clients as I am with the IRS, because I'm compelled to comply with the tax code. And unfortunately, the tax code's gotten so complicated. The one man shows, even the ones with multiple partners, they're still trying to figure out the 2017 Tax Reform Act. Is entertainment deductible? Hey, this, I can't believe some of the things I'm still hearing is, in 2020, tax code in 2018, they still don't know some of the things, right? So,
yep.
How are they going to know about 831B? And then how are they going to take the time to get educated and understand that? Now, we work with a lot of CPAs, and I think there's a CPA stands for compliance public accountants, are real tax planners. And unfortunately, I'm going to say this, and it's my belief. I haven't got any statistical data to prove this, but I'm lucky to find 1 out of 100 small to middle market CPA firms that are true tax planners to their clients. And it's unfortunate because, to be honest with you, they're more about complying to the tax code than they are doing tax planning. And in my opinion, whoever understands the rules the best will win the game. And you got to understand the rules. I mean, if both players are equal in talent, and I'm talking, let's say both 2 business owners, 2 plumbing firms,
Yep.
right? Same amount of employees, they do the same services, they compete in the same marketplace. If one's outgaming the other just on rules as tax strategies, I can tell you who's going to win that one ultimately. Because in these downturns, those are the guys that have been putting profits away for the last 10 years, building up these substantial amount of reserves. And now you have a collapse in the market, or you have an unforeseen issue like what we're having right now. Unprecedented, right? Nobody saw this coming, whatever, and nobody planned for it. Okay, whatever. But who's going to win in that? I can tell you who's going to win in that. The guy that's been sitting on the cash in the back room. And I saw this back in '08. One of the reasons I got into this business, I lost so many small business owners because what they knew was leverage. They just kept buying more stuff, took advantage of the 172 accelerated depreciation. And guess who was telling them to buy more stuff? Their CPAs were telling them to buy more stuff. Hey, buy that building. You get to depreciate it out over 39 years. Well, it's my second building. Do I really need it? No, but that's really the only tax planning strategy I have for you. You know what I mean? And so they got leveraged out. And then unfortunately, economy took a big step back, and we saw a lot of those small businesses go out. And I thought, these were friends of mine. These were community leaders in the community. These were risk takers, entrepreneurs. And I thought, man, there's got to be a better way. And that's what got me into this originally. Now, our clients today that's been with me since 2012, 2013, they're sleeping a lot easier at night now. And that's probably the greatest compliment we can get as a company, that our clients sleep better at night knowing that they've participated in our program. We've done it the right way. We made sure you're compliant, all those things, but now you can sleep easier at night knowing that that money's sitting in the back.
Absolutely. There's a lot of great points here to unpack. So, using that example of the two folks competing, two business owners, I mean, just with the one reducing taxes and having an A player on his team, a tax professional, and putting reserves away, just the competitive advantages. And they didn't even try to sell one more unit than the other guy. All they did was tweak the things that they're doing inside of their business to keep more money legally and position it somewhere to utilize when they need to. It's quite amazing. And then the other thing too that we've mentioned to our folks too, that I remember, through my sports career, that there were certain coaches at certain levels, and they all were phenomenal of what they could do at that point in your career. Like a high school coach, and there's some great high school coaches, pick your sport. They're really, really good of getting athletes up to a certain level, which then they go to college, and then there's a college coach getting them to the next level, and then they go, playing the NFL or the NHL or the NBA or whatever they're into. So it's all different levels, and they all have sort of their, all of their knowledge base, their skill base in a particular place. It's the same thing when you're working with professionals, and especially financial professionals and especially CPAs, that you still, you have the same tiers. So when you're playing at a higher level and competing, especially with in the business world, in the marketplace, having an A player on your side that, you using that example, just helping you to pay legally less in taxes without over leveraging yourself, and losing control over the money, and then keeping more what you have and allocating that capital. It's astounding. And now when markets are up and everything is great and everybody's doing well, you don't really necessarily see that because it's under the water, but like the, what is it, the iceberg? But now you can really see when it's all going down, who's got the competitive advantage. And as you mentioned, there's a great opportunity now in the marketplace, just as there was in 08 and 09, right?
Yeah, I'll give you a couple industries real quick that have been doing this for the longest time, and that's auto companies. There's a reason why when you buy a vehicle, they push really hard on those extended warranties. Well, it's because they're putting that money they're charging you in their own insurance companies in the back room. They're expensing it out of their operating company, and they're dumping it into here. You just took on a liability for 3 to 5 years. The efficiencies this brings you, it allows you to take on more risk. And charge for it. A good example, the plumbing guys or the HVAC guys or anybody out there, they sell these service agreements. And it's crazy when you think about this, right? They'll sell a 3-year service agreement, charge you $400 for it. Well, it ends up $400 this year as profit, but I just booked the liability for 3 years. So I got to rely on cash flow 2 years from now to come out and fix, to service that AC or the heating systems. I mean, just so everybody knows, big businesses don't run that way. They don't. They book liabilities all the time into their insurance companies, and then they bill back on they don't have to worry about the current cash flow. And if they have current cash flow, hey, good for them. But if they don't, they're relying on last year. They're relying on the profits from that sell from 2 years ago. when you talk about efficient, what we're ultimately talking about is the efficiencies of the business. And these are efficiency tools that, and that's, by the way, it's what it is. It's a tool.
Yeah.
For some business it works great, for others not so much, but it's a great tool for the right client. And to me, it's the efficiencies of business. It's not relying on the current income. It's relying on past good years to make up for the bad years. And because, hey, nobody saw this. I wish this upon nobody. I mean, this is bad, bad, bad. I mean, the virus is bad. I mean, all this stuff. But so's recessions. Recessions are bad too.
Yeah.
Unfortunately, we have a lot of black swan events. I mean, seems like every decade we get one at least, and this maybe is our one for starting in 2020. Who knows? But anyway, so to me, it's the ability to become more efficient in your business, and that's key. This is how big boys become. This is how big boys got bigger. This is how they maximize the revenues off their customers. This is how they take away profits and build them away. And it's a great tool. Unfortunately, we have to fight other advisors out there that either don't have the knowledge, don't want to take the time to understand, or just read the highlights from the IRS saying these are abusive things, and then throw everybody. It's like throwing everybody in the same bucket, right? I mean, family trust at one time were considered, but family trust today is a normal business. I always argue about the 401k. The 401k first came out in the early 80s, it almost guaranteed you an audit. They didn't have ERISA rules so much in place yet. There was a ton of fees being charged on the program. And now, yep, it's become a normal business practice. But, I believe 831B is going to become a normal business practice as well for all businesses that own some kind of form of their own insurance company, because it's not because of the tax play and all that, which, again, there's great advantages to that. But the biggest reason is risk, to mitigate risk more effectively. Business owners are going to continue to take on more risk. Property and casualty insurance companies aren't going to jump in front of this anymore, and they have to. It's a highly competitive world right now. And one way to keep the premiums down is keep excluding coverages. That's why, if I can't charge for it, the premium, then I got to exclude it. I mean, it's pretty basic principles of business. And so, this is going to shine more and more on why traditional insurances will never cover these types of business interruptions. It won't happen. The business owners won't buy it anyway because it's going to be too darn expensive.
Right. I'm just thinking about someone in my network too that he speaks a lot, and he's an international speaker, traveling and so forth. So his business is basically, that part of it is completely down. But because he had something similar to this set up and a strategy like this in place, well, there's losses now that can be booked because you had to cancel all of these events where there was ticket sales, there was revenue, there were speaking fees, and so forth. Where it's going to be a tough day to get a good quality policy just in place and transfer that risk to a third party.
Well, and a couple things about that, and the one we're seeing mostly because we have a pretty heavy influence in the medical community, specifically dentists.
Yeah.
Dentists have been mandated to shut down by their government, by their state governments. You talk about, I love dentists. I love doctors, like their plastic surgeons and everybody had elective surgeries. They've been shut down. Mm-hmm. Those guys, unfortunately, leverage a lot. They buy equipment. They take it them 172. So I think we have probably 20 some odd claims going on right now, just with dental practices that we've insured over the years. They're worried about their employees. They don't want them to go to work for. Amazon's advertising here. I live in Boise, Idaho. We have a big warehouse. Amazon's, Walmart's. They're worried about losing these employees. They have a good cohesive network of employees. They're worried about losing them. And even if they can reopen, when they do reopen, who's going to be there to work for them? So, to be able to sit there and use these funds to pay for their payroll, keep their employees on their books. Now, granted, the government has stepped in with some programs, and God bless all that, but we don't know. Is it going to be enough, right? So again, good risk management tool. You can use it for a variety of reasons, and all of which makes our clients sleep easier at night. And that's a big, again, I'll reiterate it. That's the greatest compliment we can get from our clients is, by utilizing our programs, they just sleep easier at night, and it's makes you feel good.
Yeah, to your point about sleeping well at night, right? So let's just use the PPP and all these programs. And, now we get news on a daily basis, but you start to see that, hey, number one, the money ran out. Most likely there'll be an influx of more capital. So that's going to keep going. But the big boys, as you mentioned, the big corporations, they cut in front of the line to make sure that their stuff was funded first before the majority of smaller business owners. So that's not something you and I can control. Again, people get angry about this stuff. I'm like, that's wasted energy. Don't get angry about this stuff. Know that it's a reality. Get clarity is gold here. Get clarity. Know that there's a game. This is how it's going to work. And how do you position yourself in your company to play in this game and control the uncontrollable variable instead of getting angry that some guys cut in the front of the line when this is going on. Basically structure your affairs in such a way that you don't have to depend on getting served at the line. Yes, it'll be great, but you have things in place that it's not going to break or sink your business because you didn't get in time or get funded from an outside source like the SBA.
I couldn't agree more. In fact, a lot of our our business owners are conservative by nature. Some of them don't even have banking relationships because they pay everything on cash, and they don't believe in. They got through 08, 09 not being leveraged, and those are the guys that survived the downturn, right? So, for them to run to a bank now and they have no banking relationships. A lot of these small businesses don't. They run on cash basis. They don't believe in debt. They're not. They stayed away from leverage, and unfortunately, that also kept them from having banking relationships with loan officers. To where, I heard it from my banker. Man, I've got people I haven't heard from in years reaching out to me, and they got to take a back seat because I'm going to work with my own clients first. I got to make sure they get taken care of. And hey, that's makes perfect sense to me. Why not, right? You got to have somewhere you got to determine who's going to get in first in line here. And so, no, that's a double whammy. Here's a business owner, successful, doesn't believe in debt, pays everything in cash, doesn't have a banking relationship, and he doesn't know, and he got to go to the back of the line to get in line for an SBA, and hopefully he went to a small community bank to do it. If he went to the big banks, I know there's some negative stuff coming out by Wells Fargo today that what transpired there would go, no shocker, I guess.
Yeah, exactly. Yeah. Again, for viewers and for listeners, it looks like there's some lawsuits that they're having too, with a lot of shenanigans and a lot of favors done with these SBA loans, which, again, to your point, shocker, right?
To your point, move on. It's a sense of reality, and
Yep.
Again, I'll say it, you'll say it. Winners and losers, man. And here's the thing about our program. Ultimately, and I said, I think I've already said it, but I want to reiterate it. You can game the game better, understand the rules of engagement. You're just setting yourself up to win the game better. That's it. It's no different than any other sport. You just talked about your sport analogy with coaches.
Yeah.
I can think of one coach in particular that knows the rules better than anybody. That's the guy that coaches the New England Patriots. That guy knows the rule book better than anybody.
Right.
And what does he do? Again, if all talent's equal, whoever understands the rules of engagement are going to be the outcome of the winner. And that I want business owners. I want the risk takers. I want the entrepreneurs. Everything's about calculated risk at the end of the day. If you can't calculate the risk, then you probably shouldn't do it. But calculated risk today, opening a business, running it, doing everything else, if you can just park a little bit off to the side and not buy into getting the boat, getting the big house, buying all this, at the end of the day, here's what I know, being 52 years old, that stuff doesn't fulfill you ultimately. I think everybody says, and it's kind of almost cliche to say, but it's true.
Yep.
Buying stuff doesn't fulfill you. Helping people around you fulfills you much better. I'm so much more convinced of that. And that's why I feel so better about our program today, because we are literally keeping businesses afloat right now. We were the first ones to respond, getting money back into these companies. Government, some of these business owners still haven't got their money yet. And yet we're literally sending money out of their insurance companies back into their businesses and paying their payroll, paying their rent, keeping the lights turned on. We were the first ones to respond.
Life settlement investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic, market, and geopolitical risk. It's been part of the billion-dollar blueprint followed by institutional investors. And if you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing life settlement investments, Penumbra Solutions, at cashflowninja.com/life settlements.
And again, Congress passed this tax code.
Yeah.
Why doesn't more people do this? It's because, unfortunately, it was hijacked by state tax attorneys back in 2000. And, back then, estate taxes were ridiculous. I mean, and through the 90s. And it was a great estate tax play. But the PATH Act did away with some of the, there's some limitations you can put on for estate tax planning now with these programs. But unfortunately, the IRS went after them. And, and my experience with the IRS is get me once. You're getting me by saying, okay, the premium you're putting into the insurance company is not deductible. But don't get me twice. Don't make the insurance company the owner through an irrevocable trust or have my kids own it, and then I get to bypass the estate tax planning. That's where the IRS gets upset. That I've been an observation of. Get me once, don't get me twice. And when we Americans can't help ourselves. There's something about paying taxes we just despise, and I'm good with it. Trust me, I don't want to pay any more than I have to either. But we will find, if there's a little stream, we'll try to make it a river, and unfortunately that happened, and it became an abusive transaction in some ways with some promoters.
Yeah.
That we're estate tax attorneys more than risk mitigators, and I make it very clear to business owners that we hire attorneys and we hire CPAs. Other than that, the people that work for strategic risk alternatives are risk mitigators first and foremost. That's our background. That's what we know.
Yep. Absolutely. And what I would add to that too is just saying too that the majority, I would say, I mean, what is it? What is the joke? 99% of statistics are made up, but the majority of if you think about it, of financial advice that's out there overall in general, that's very generalized and given to business owners is not necessarily number one in their own interest. And it's actually very dangerous if you think about it. Because if you think about, I just see a lot of professionals going into businesses. Hey, you should diversify outside of your business and give it to me and I'll put it in stocks, bonds, and mutual funds and do all of these things. Number one, the money's going out of your business and investing in someone else's business right now. Number two, you lose complete control over that. And this is a lot of the advice out there. What we're trying to bring to you and what we've been trying to bring to our community for the last 4 years is higher level strategies, which allows you more control, helps you to sleep well at night, and allows you to, again, keep more what you have and position capital more efficiently so that you can grow your business, invest it in your business, protect your business, and by doing that, serve more people and provide more value to more people. Any comment, anything you wanted to add to that, Van? And maybe the other question that I would also have is at what size of a business, because there's a lot of different, I would say people are a lot of different stages in their journey as entrepreneurs and as business owners. At what stage does it start to make sense to have conversations around a lot these strategies that you guys offer?
Yeah, so I would say, it's not so much, I get that question a lot. What size business and so forth. I don't think it's really the size of the business. I think, and we have clients that will do $30,000, $40,000 a year, and we have clients that will do $2 million a year. I mean, you can put up to $2.3 million a year in these programs. Has to be actually determined, 4-part test and all that stuff. But so I don't think it's necessarily how big the business is. I think it's more had to do who owns the business, the individual owners. When we talk about who our client is typically it's fairly successful people and conservative nature, past the spinning period of their lives, but at the same time, where are they at in their life? Who they selling their business to, who's all these things that go on now, and they're typically in their mid-50s. So to me, it's where you're at in your life. To your point, where they're at in their own life and business. Are they more of a saving? Everybody goes through if you're successful, everybody goes through that spending period, right? Keeping up with the Joneses and all that. It's just, again, that's fine. I did it. you know, you get caught up in that a little bit, but after a while, as you get older, that doesn't, your kids are good. You send them off to college, you did all those things. But now, how do we better position ourselves to go enjoy life and not be such a slave to the business? Our program allows you to do that as well, long term. And so from my point of view, it's really where you're at as a business owner. If you're not a saver, if you don't want to put away that top tier profit margin and put it away into an insurance company and expense it out of your operating company, do all those things, then you're probably not going to be a client of ours anyway, regardless of how much money you make or how much gross revenue you have. If you want to go, if your plan is to buy more buildings and do all those things, I commend you for it. But for me, calculating risk, mitigating it where I can, and to me, that's the survivability. My survivability long term is going to be much greater if I do it this way versus just always putting gas to the pedal and hoping that these things like these will never happen. You never want to get caught in unforeseen issues, and all that hard work could come to be nothing, unfortunately. And the risk you took to go do what you did, thinking this was the only risk you were taking, and then something else hits you all of a sudden. Man, it's a lot of work down the drain, and it's not good. It's not a good feeling. I've lived it and I've seen it. With business owners.
Yeah.
You got to appreciate risk takers, but at some point you gotta calculate the risk more effectively and as best you can anyway. And I think we bring an extra value, an extra step in that place for those business owners at the right time in their lives is what we see.
Great. Yeah, I think from a personal standpoint, it's a great time for all of us listening to this and watching this to reflect too. Let this be, use the lesson in this chaotic environment, this global pandemic. And from a personal standpoint, the lesson is, was all of the foundational stuff in place and pieces in place that needed to be in place to weather a storm, this will not be the last one in our lifetime. It'll come in another shape, way, or form. I didn't foresee this happening, but it did. And then from a business standpoint, the same thing too, is how structurally sound was your business, and did you have all the pieces in place as far as foundational pieces, and then strategies such as the ones that Vance shared on the show in place for the inevitable, because this will also not be the last, unfortunately, the last challenge that business owners will have.
I agree, and the world's getting complicated, right? The risk isn't getting less, even if these things don't happen, right? Even if this doesn't happen, look at, we introduced a thing called the third-party business interruption this year, where more and more businesses are dependent on third parties to provide services to them. A good example would be the clouds, right? I'm putting I don't have paper files anymore. I have a CRM system, and I'm paying a third-party vendor for that. Well, if that third-party vendor gets complicated or it gets compromised somehow, some way, and I can't access those files, or I can't, what does that do to my business? That third-party business interruption today, assuming the pandemic doesn't happen, we talk about third-party business interruption. It's a huge exposure. We call it unfunded liabilities. Well, how do you fund those liabilities? By utilizing our program. But think about the risk business owners take today by not having the hard paper files or putting all that stuff up in the clouds and relying on third parties to be there when they need them, or to be able to sign into a computer or have internet service. What happens if internet service gets interrupted all of a sudden and you're down for 2 weeks, and your roof of your building didn't blow off because of the hurricane, but you're down for 2 weeks because you don't have internet services. You're not going to be able to trigger a traditional insurance company policy under that, but you could under our risk mitigation, you will be able to submit claims back to your insurance company, and be made whole somewhat by dollars you would have just paid Uncle Sam in the previous years. Well, you know what? Instead of relying on Uncle Sam, rely on yourself and be self-sufficient. And this program allows you to do that. Bottom line.
Absolutely. Van, where can folks learn more about the programs that you have and get more information about some of the strategies that you guys offer? And where can they stay in touch and follow you guys?
Yeah, so strategicriskalternatives.com is our website. That's probably going to be the best place to find us. I mean, I have a team of advisors out there, and we work with advisors all over the country. So our typical advisor will be and I say advisor, but it's really somebody that knows about our program. It will be a CPA, financial advisors, and also property casualty agents. I mean, so that's predominantly who we work with their clients. And then, of course, we have a lot of clients in-house. And I've got a team of risk management, risk mitigators that can help assess risk, tell how our program works. And then, of course, we have a slew of videos that are also available off that website as well. So, but other than that, I would tell you that, and of course, emails and all that good stuff is all in there as well. So strategicriskalternatives.com. And, we're busy. We're busy dealing with claims. We're also busy talking to clients for the first time. And we got a lot of people reaching back out to us that wish they would have done our program years ago, but their CPA unfortunately botched the thing because they didn't understand the program. And I make sure I tell advisors all the time, you can't be the smartest one in the room when you got a CPA or an attorney in there. They got to be the smartest ones in the room. So you always want to educate CPAs. And that's what we try to do all the time is educate. This is not taboo. This is not, and unfortunately, the pandemic is brought to reality a lot of people. And, it's unfortunate. But if they survive this, when they come back open, they need to get more efficient with their business. And hopefully they'll reach out, or they'll have advisors out there that say, hey, there's a better way than just taking it or relying on the government to bail you out. Most entrepreneurs, most risk takers, they'll take the money, unfortunately, but they prefer, they're bootstrappers. And so, if I can do it myself, I'd rather do it myself.
Absolutely. Well, thank you so much again for coming on the show and sharing all of this knowledge. And I couldn't think of a better time to just get clarity. And if this is the first time you've heard something like this, I would definitely go to cashflowninja.com, check out all of the previous interview that we did with Van, and then also some of the other episodes with similar kind of different strategies, which is not really shared out there. Appreciate you coming on again, and thank you so much for coming on the show.
Hey, I really appreciate you giving us the opportunity, and you have a great show, and anytime. You have a great audience, and forward thinkers is what we're looking for, and I think you got a lot of those listening. So appreciate it.
This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.